Co-CEOs of Netflix telling investors yesterday they're, quote, super confident the deal with Warner Brothers Discovery will close, citing market share against streamers as a key reason. Our Deirdre Bosa is digging into that for today's Tech Check. This is a little complex, but important to understand, Dee.
It is. So you're right, Carl. Regulators, they're going to fixate on the giant that Netflix and Warner Brothers would create. But the real outlier is YouTube. And it may actually be Netflix's best shot at getting a deal through. Regulators, they work off of a narrower definition of the market. Premium scripted content. So that's movies, series, studios, sports rights. And under that framework, Netflix and WBD, they look like two of the biggest players merging into one. Now, YouTube doesn't show up in that analysis because it's user-generated video. That's considered a different product category. But measured by Nielsen, YouTube is the single biggest TV distributor in the country. And that gap between regulatory definition and actual viewing behavior, that's exactly what Netflix is trying to exploit here. Here's the co-CEO, Greg Peters, at the UBS conference yesterday on what happens to the market if they were to get HBO.
We go from 8% of view hours today in the United States to 9%. So we're still behind YouTube at 13%. And potentially worth noting that we would be behind what would be if Paramount combined with WBD, them at 14%. So we think that there's a really strong fundamentals-based case here for why regulators should approve this deal.
So that's the crux of the Netflix argument. If the biggest distributor in TV is already YouTube, then combining with WBD, it doesn't create dominance. It actually creates a counterweight. Regulators, though, they focus on product substitution and competitive constraints. They care about whether Netflix and Warner Brothers control the same kind of content. And this all really points back at YouTube, guys, itself. This is a platform that is still underestimated in the whole TV streaming discussion. It sits inside of Alphabet, but some argue that it gets lost there and it could be worth more than $500 billion. Some say $1 trillion as a standalone company.
I mean, it really does depend on how the regulators perceive the market, because I also remember, Netflix has famously said their biggest competition is sleep. And that's not going to be factored in exactly on antitrust concerns. I think they've also cited in that shareholder letter video games and all sorts of things that occupy our attention.
When you look at, I thought about that quote as well, Sarah, the whole sleep argument, and that was sort of a different era for short-term video, right? And there's some analysts that are arguing that maybe this is a defensive move by Netflix trying to, get more content under its umbrella because it's facing this threat from YouTube and TikTok and other short-form videos, right? Back when it said sleep, I don't think it was as built up. So that is a very important part of the equation, and that is obviously what YouTube does so well.
But the implication is that they don't have any competitors, and that might come back to bite them.
Yep. I mean, then they could talk about TikTok and Reels, right? Just sort of how Instagram has used that argument in the past.
It'll be interesting. Thank you, Deirdre. Not even up to the antitrust because still figuring out what's happening with these bids.